Many business owners believe that once a company makes profit, it can choose not to distribute the profits into perpetuity, especially where it is trying to ensure the shareholders avoid personal income tax. That is what we are going to be contemplating on today, because there's a section in the tax law that seeks to prevent the possibility of this. In fact, the section could mandate that certain undistributed profits should be deemed as dividend and so distributed. Oladejo Adeyemi is my name. I'm your former business coach who designates his time to reading the tax laws so that you don't have to spend as much time doing the same. After my last video for last week saying thank you, I got a lot of reactions from followers. Some people even said I should probably be dressing that way and be doing subsequent posts that way. Well, I'm still considering that. But for now, I've retained that dressing in traditional attire only to special editions. So back to the conversation on undistributed profits that can be deemed as distributed. Section 10 of the Nigeria Tax Act provides that where a company chooses not to distribute its profits, meaning it continues to pile its profits into its retained earnings year on year, at some point, if the company is a Nigerian company that is controlled by 5 or less individuals, the authorities may mandate that a proportion of that undistributed profit that has been warehoused in retained earnings be distributed or deemed as dividend to the extent that it will not be detrimental to the continued existence of the company. Let me break it down. You will see why this is a serious matter. Tax is about profit. When a company makes profit and the company chooses not to distribute the profit, a shareholder only gets dividend by investing in a company. Dividend is declared from profit. So remember, tax is on profit. Profit arises when income is more than expenses, revenue is more than expenses, you have profit. Those profits, you are supposed to then distribute the profit after tax, of course, to the hands of the shareholders, who will then pay their own income tax from the dividends that have been received. So in a case where the company then chooses to stockpile that profit in retained earnings, the implication ultimately is that the individual shareholders will not have the opportunity to pay tax on that income. In as much as there is nothing wrong in building up retained earnings, what this section presupposes is that it has to be targeted and specific with appropriate documents showing the need for that retained earnings, whether it's for business expansion purposes or whatever it is. In the absence of that, this provision empowers the authorities to be able to, by a notice in writing to the company, determine that such amount that will not be detrimental to the continued existence of the company be distributed and deemed dividends in the hands of the shareholders. I'm trying to summarize the provision for you so that you understand the powers that you have therein. Who are mostly affected by this provision? Family businesses, businesses that are controlled by 5 or less individuals, than a Nigerian business, owners managed businesses where you can decide what and when you distribute, your profits. This provision is a provision that discourages such action in a bid to ensure that people do not game the system as to when they want to choose to pay taxes. So the key trigger here is that the company that will be affected must be a Nigerian company and must be controlled by 5 or less individuals. Of course, I mentioned the tax impact, because if there's no distribution of profits, there will be no income tax payment in the hands of the shareholder. I've also mentioned that it cannot just be at the whims and caprices of the tax authority. It has to be a notice in writing. And the notice in writing must specify certain things, the amount to be distributed, the net amount, the withholding tax, on it, and all of that, explicitly stated based on what the law specifies. You should, however, then wonder, is it that once the tax authority, notifies the company has no other choice? That's not the case. The company has a right to appeal. If the company believes that the amount that has been specified by the tax authority is going to be injurious to its continuous existence, then the company can appeal that amount to justify whether the amount is too much or is impracticable, such that it cannot afford to do that distribution at that time without hampering on the smooth running of operations or continued existence of the company. For limited liability partnerships, however, the law is that all of the profits should be distributed. All of the profits should be distributed in the hands of the respective partners constituting that partnership. Bear in mind that the tax authorities do not have forever. They have 3 years, after the audited accounts have been received, to be able to make such directive or issue such a notice to a company. The practical message here for taxpayer is that you need to continue to remind yourself that the tax environment has changed. That's something that we stress a lot on this channel. And it's important that you understand the implications of those changes such that whatever practices that you have sustained in the past, you're able to review them and take holistic decision on whether or not they need to continue. So if you are stockpiling profit for debt repayment, for working capital, for asset acquisition, whatever it is not wrong to do so. But bear in mind that it can get to a certain level where the tax authority may choose to ignite the provision of this section to declare and direct that certain amount of that undistributed profit constituting your retained earnings should be distributed to taxpayer. Closely held companies must therefore be careful. Owner-managed companies must watch out for this. Family businesses should watch out for this. Companies that are Nigerian companies that are controlled by 5 or less individuals should ensure that your intention to retain profit is not then tending towards illegality, because retaining profit without clear business reasons may invite undue scrutiny from the tax authorities. Undistributed profit can become distributed or deemed dividend, and deemed dividend can become taxable in the hands of the taxpayer. I hope this helps you. Continue to like, share, follow, subscribe. Let's continue to ensure that we educate our growing business community so that everyone knows the right thing to do. Bye for now.